Good afternoon to all of you out there, all my friends, all the friends of Mike Newmeyer and friends of your money and your accounts and protectors of those, which I hope to be. I have, some messages for you. I don't want to be a fear monger, but I feel this is an urgent situation. I think that you need to have a sense of urgency. Maybe you already do. All you have to do is turn the television on and go to the money stations that talk about what's going on in the market. Or you can look at Wall Street Journal, or you can look at Investors Daily, or you can look at a lot of other publications, and you're going to see that most probably we are in a recession already. Now we measure it 2 quarters back to back, showing a contraction, but I'm telling you, and you know what inflation is doing. It's already affecting you so much. And we know also that consumer confidence is reduced. So there's people that are aware of this and are acting on it. And what are they doing? If we know there's a recession, I made a few notes here of things that are most important. The smart money is already leaving the market. The young people that are willing to take a lot of risk and so forth, well, they may be putting a little money in, taking advantage of lower prices, which of course they are lower. And that sort of acts like a counterbalance, and it makes it look better than it really is. And it doesn't look good, but it makes it look better than it really is. And now all of a sudden, Bitcoin is losing its credibility as a currency that is going to be better than the dollar. I never thought it would be, and now it's proving that it won't. So we're losing a lot in Bitcoin and a lot in the other similar currencies. So that's going out, and it's not going into the market. Interesting, huh? It's going out wherever it's going. Now, what do we do? Okay. What I tell you is number one, your accounts at work, the 401ks, the 403bs, all that sort of thing, huh? TSBs for government workers. Put that money into either stable value or the money market account. Some accounts will have stable value, some won't, but get it out of the market. Get it into a money market, not a money market mutual fund, just the money market fund. That is my recommendation. If you do that, at least preserve your capital. And if the market continues to go down at some point, if you want to go back in, you're going to be buying those stocks at a lower price. So how bad can it be? It isn't like the market's going to suddenly turn around and we're going to zoom back up to 36,000 in the Dow. I don't believe that. I don't know anybody that does believe that. We're in the beginning of a recession that's probably going to get worse. All right, we got all this stuff that's going on in Europe and everywhere else, and what's going on here. All of all the issues. So, we're spending too much money as a government, and that's not going to get us out of inflation, no matter what they say. I mean, that's absolutely ridiculous to think that you can spend more money to get us out of a recession. And then raising taxes. I don't care who you raise the tax on, it's not going to get us out of inflation. It just isn't going to work. There's no way it can work. And when they talk about raising the taxes on the rich, they're going to raise taxes on everybody. Mark my words, they're going to raise taxes. And incidentally, inflation is a tax. So if we've got 8% inflation today, and it could be higher later, that's an 8% increase in taxes for you, everybody that buys gasoline or food. Okay? What's the difference between inflation and a tax? It's the same thing. It's money out of your pockets, or money that never went into your pocket. That's a sad state of affairs. So those are some recommendations. I don't like to see people lose money. Now, if you want to do something positive, then give me a call, Mike Newmeyer. You'll see the number in a minute, okay? And I can put you into things. I've got 3-year accounts that'll guarantee over 3% interest. 3% interest is, what's that? 6 times as much as you can get in the bank on any kind of account. Pretty good. And that'll cover the next 3 years for that, okay? I've also got lifetime income accounts where you can get a 10% real bonus in dollars that goes into the account and then automatically grows to 6% until you start taking income. That's a big deal. Those are safe. There's no loss possible. There's no market exposure. You can't ever lose money. You're guaranteed those dollars are going to increase. And it's guaranteed, and you can get lifetime income out of those. Now, I tell you, do it while they still have bonuses. because there's a tremendous movement of money out of the market and into these kinds of products. And as it moves into these kinds of products, the biggest insurance companies that offer them are going to slowly take the bonuses away. They're not going to need them. So those are very positive. You can do that with a Roth. You can do it with a regular IRA. You can do it with a rollover from a 401k and other accounts like that. So there's lots of things you can do to offset what's going on out there. And if you can get 6% growth in your retirement money and a 10% bonus, let's say, or a 7% bonus, you're way ahead. You're way ahead. And if you can get 6% guaranteed growth while our economy is going up, inflation's going up and up, okay, you can offset some of the inflation with that guaranteed growth. So give me a call. I've been helping a lot of people for a lot of years, and I probably can help you. Thank you.